you're currently holding a variable mortgage interest rate here in Canada, then brace yourself and listen up. Inflation just recently ticked up from 2.8% to 3.3%. And if history is any indication as to what Bank of Canada is going to do, it's highly likely that they could possibly raise interest rates again in September. So in this crazy battle of trying to beat inflation, Bank of Canada has literally made things unaffordable for Canadians, and Canadians are definitely bleeding. From homeownership perspective, I hear it all the time. I've got clients calling me saying they can't afford their homes anymore and they want to find alternative options to be able to make this work for them. And many people are actually picking up and moving to another country because it's just, Canada's just not it for them anymore. Now, the plus side to all this is because of the rising interest rates, it definitely has an effect on home prices. If you remember, 2 years ago, home prices were just completely unreachable, and they were getting to a point where it just didn't make any sense. I mean, they didn't drop insanely low, but it's still better than what they were. In fact, in July, we saw home prices drop and sales slow down as buyers used the wait-and-see approach. Months of inventory went up to almost 3 months. Now, typically you have 3 to 4 months of inventory, which indicates more of a balanced market, anywhere from between 4 to 5 months, which will indicate a buyer's market, and anything less than 2 months or under 3 months, 2.5 months will be considered a seller's market. So right now we're definitely leaning more towards the balanced market, and there's a lot more homes on the market right now if you're currently in that process of buying. So what does this all mean for you? Well, if you're currently in the process of purchasing property or in the market to buy a property, it's not a bad time to get in, mainly because prices are down. You gotta pick your poison. Either prices are gonna be high or interest rates are gonna be high. I'd rather prefer prices come down and use a temporary interest rate so that I can get into the market and then refinance afterwards when interest rates drop in the next year or two. Buying a property right now is not a bad idea. Just make sure you're getting into something that's affordable for you on a monthly basis. Don't go out there and start buying $1 million properties if you can't afford it. Budget yourself accordingly so that you can enjoy life as well. Don't have to stay in Toronto. You can go to the cities outside, across GTA, where prices are much, much more affordable for the same kind of property. Anywhere outside of Toronto, hour and a half commute to work is reasonable for today's time. Don't get so picky about how far you have to drive for work. It happens. People commute all the time. Suck it up and make sure you have a good home. Trust me, you'll be glad after a long days of work to come home to a nice, relaxing neighborhood and a house that you can call your own. Now, if you're on the selling side, listen, sell only if you need to sell. If you've been there for the last several years, say 5 to 7 years, then you're not losing any money, you're just not making what you could in a heated market. If this process helps you move to another property and that's what your goal is, then sell, take the equity out, use it for your other property, and get moving with your life. Although there's going to be ups and downs in the real estate market, the trajectory of the real estate market is usually upwards, and that's what we've seen on a 30-year graph on the Toronto Real Estate Board. It's definitely a very interesting time and an expensive time to be living in Canada. However, don't be discouraged. This is not going to last forever. And don't freak out. Things can get better, will get better, need to get better. Got any questions, want to talk, DM me. We're more than happy to help you. Like and follow for more.